Hello, good morning or good afternoon, wherever you may be, and welcome to our presentation this morning on flames. It's a new methodology to aid with the quantification of fire risk. We've been working on it for a couple of years now, but now we've gotten to an endpoint and we have it released and in the world and approved. So I want to take you through an overview of what we built. I'll be joined in this presentation by Dr. Matt Hinds-Aldrich, Senior Risk Strategy Lead here at AAIS, and I'm Phil LeGrone, the VP of Data and Actuarial Solutions. One note at the very onset I wanted to make is for all of those that are registered attendees, there will be a white paper on this topic of flames and what we've built, kind of soup to nuts, that will be going out later today. So I wanted to make sure you were all aware of that. There's going to be a lot more detail provided to dig into beyond our remarks during this webinar. So with that, I'm going to have Matt go ahead and jump in and get us started with an overview of what we plan on discussing during the course of this webinar.
Thanks, Phil. Thanks everyone for joining us. So do a quick overview. So in today's presentation, we're going to talk a little bit about the history of public fire protection and frankly, in particularly why AAIS took on this, the need to address and come up with a new strategy. We're going to talk a little bit about, again, delve into the background, a little bit about the process and the ways in which we engaged with the wider industry and community to try to understand what the existing landscape looks like and where some of the pain points are and how we've been able to try to incorporate that into our approach for with the flames methodology. We'll talk and then Phil will talk a little bit about the data we looked through and evaluated, and then he'll get into a bit more about the methodology and the model that was actually developed. We'll talk a little bit about flames as it sits currently, and a little bit about the roadmap, and then at the end we'll wrap up with questions and answers. So if you have, if you come up with anything throughout the presentation, feel free to put it into the Q&A, or feel free to kind of jot it down. We can address those towards the end. So as I noted, one of the key things here is that the non-cat fire losses are have been identified as a persistent driver of loss. It's very easy to overlook non-cat fires, and again, for those recognizing that some of the folks in the industry on the call may not necessarily be from the insurance industry. So when we're referring to non-cat fires, this is kind of your traditional structure fires, whether they be residential or commercial. And what we mean by non-cat, again, is that it's non-catastrophic, so it's not referring to wildfires in particular. And so with non-cat fires, one of the key issues is that frankly is it in the kind of the ecosystem of kind of attention these days. Wildfires and particularly hurricanes tend to get a lot of attention. The wildfire peril is particularly grown in past years with some significant losses in the state of California in particular, and then of course, as we've seen in the past year in other states as well across the West Coast. But but one of the key points to take away is that actually non-cat fire losses are actually in many cases a much more significant driver of loss across the industry. And so this data that we evaluated through, comes from AAAI and also Munich Re through their annual insurance reports. Really one of the things that really struck us through this is that actually, despite all the attention given to some of the catastrophic losses, some of the catastrophic perils in particular, we're starting to see that actually non-cat losses are actually trending up. And so this is a pretty significant driver loss across most insurers' book of business. And this is frankly, but again, it doesn't tend to get a whole lot of attention, and particularly this upward trend remains a consistent challenge. And so it really is highlighted that actually we need to come up with a strategy to actually address address these non-cat losses, or at least we have a better understanding of it.
Yeah, just from my perspective, fire, is kind of table stakes for writing property coverage and has been for, more than a decade. And it's troubling to see that kind of growth of just sort of the plain Jane structure fires, and the losses continue to trend up fairly consistency. And it just points out the need to have a rigorous approach to risk quantification, underwriting, taking on that risk in this evolving environment.
Thanks, Phil. And yeah, so that's part of where our what we started realizing is the need to address and to figure out how to better understand the non-cat fire peril. It really caused us to actually go back to square one and say, all right, where does our current understanding of non-cat fire losses come from? And so we started doing some, again, basically some digging and tried to understand, let's get back to the root of our understanding and to try to figure out where some of our current approaches came from and some of the assumptions that are made from it. And one of the real striking things is actually that the ways we tend to approach public fire protection actually have their root in the National Board of Fire Underwriters, which is long since defunct. It actually went out of business in the 1960s, but it started in the late 1800s and was really initially focused on quantifying fire risk, and particularly for horse-drawn fire apparatus, and trying to assess fire protection given some of the catastrophic losses in cities like Portland, Maine, and Boston, and Chicago, and some of the other kind of mill towns, and that were having pretty significant fire losses. And so this approach, as I mentioned, was developed and can be kind of traced back in its origin to the National Board of Fire Underwriters, and particularly their standard schedule for the grading of cities and towns in the United States with reference to their fire defenses and physical conditions. It's a bit of a mouthful, but this approach, and in fact, this is a copy right here from 1916. And you'll notice that the ways in which fire stations were assessed in terms of their coverage and the areas in which the ways in which the stations were distributed across the community was really based upon assumptions around how far, in many cases, how far a horse could actually travel before tiring. And so here you'll note that there are differences in terms of whether it was a horse-drawn apparatus or whether it was an automobile or what we might think of as a truck, fire truck. And so again, this is, while these approaches have modernized in recent time, they really can, a lot of the origin, a lot of the assumptions can be based on this kind of historical legacy approach that's rather dated at this point. And so as we started to delve more into this, we started to realize that many of these approaches, including AAIS's own approach, is worth noting, were based upon some historical assumptions upon the drivers of loss. One of the big issues here is that there was this through this kind of evolutionary development of these models that were originally developed by the Board of Fire Underwriters. There was just kind of this ongoing assumption that some of these things were continued to be perhaps the biggest drivers of loss and some of the most important factors to evaluate. And so those tended to make their way into checklists. And so we started to question whether that assumption is really the most appropriate way to approach this. Also, it's worth noting that most of the approaches currently in use are really focused on fire response. And so they're really particularly focused on from the time a fire occurs through the notification and how calls are handled, through the response of fire apparatus in terms of how long it takes them to respond, and then their actions on the scene. It also tends to overemphasize particularly the distance of fixed facilities, whether those be fire stations and which type of apparatus are in each of those stations, or the distance to things like fire hydrants. And so, again, all these things may be important, but one of the things we started realizing is that, again, some of these assumptions and some of these ideas had not really been evaluated or challenged in many years. And ultimately, the real issue is that what we kept hearing was that from carriers and from members was that when they actually started to use some of these legacy approaches, or when they factored them into their current actuarial underwriting processes, that they just typically fail to explain the variance in expected losses. And so what they would expect in terms of losses would go down as the ratings would improve. They weren't necessarily seeing those as clear cut as they would expect to. And so they're having to do quite a bit of work to try to come up with those kind of the expected curves.
And just a couple other points I wanted to note here. The one about predominantly fire response focused, and for good reason. Historically, it's been that way. But the thing to keep in mind, or the issue to keep in mind, is the fire service does not control their environment completely, that they have to fight fires within, such as the population in an area, such as dominant building characteristics in an area that impacts their ability to fight fires and changes the challenge that is presented to them fighting fires in that community. And then on the overemphasis on distance, it's more about performance should be more about performance than distance. How are they responding to that? Sure, distance is a factor, don't get me wrong, but it's the performance in the field that is critical for the fire service, and some of it they're in control of, and some of it they are not.
Thanks, Phil. So as I noted, we spent a considerable amount of time, and as we started questioning assumptions, we also started to ask the people in our orbit, and frankly, some of the folks that we expanded our orbit to engage with people to understand about the fire peril as it sits today. And so we talked to a number of our members. We talked to carriers who were potentially prospective members. We also talked to people across the fire service and tried to understand kind of where does this current approach and the current approaches fit, and also what are some of the challenges that they were running into. And so as I noted previously, one of the kind of strongest messages we received from our members was just simply that they're not seeing the variation in claims using kind of some of the legacy approaches. And so what they were sharing is that they were tending to band together different classes or different ways of categorizing fire protection. And so they were actually trying to band them together in order to get enough lift in their models. And so again, for the non-insurance folks on the call, basically they were just not seeing in their claims experience, they were not seeing as much difference between when a community had a change in rating. They weren't necessarily seeing the expected change in terms of reductions in loss or reductions in severity or reductions in frequency. And so they were having to do a fair bit of actuarial gymnastics. I'm not sure that's the technical term, but having to do quite a bit of work to try to figure out how to to come up with, to basically transform the existing approaches into something that would actually come up with what they would expect to see in terms of reductions in losses. And so one of the things that often was happening is they would band together particular classes and say, well, let's just lump these couple classes together and give them all the same rating or give them all the same factors in order to get enough differentiation. And the challenge being is that particularly when the consumers and also when the regulators started learning about this, that there was frankly some pushback, and there was a couple states that took pretty significant umbrage to this because they were saying, well, when there's a change in class, why aren't we seeing a change in rates or in factors? And so they're starting to ask questions about if classes are changing, why aren't the premiums changing? And so these were some of the questions and some of the concerns that were shared with us. And again, where some of our members were saying, there's got to be a better way. As I mentioned, we also talked to a number of folks in the fire protection industry. And really one of the things that came out of that was as we started to hear more and more that people were starting to question some of these typical assumptions. And so we talked to a number of people that are kind of progressive fire service leaders. And this term CRR here refers to community risk reduction. It's a more modern way that the fire service is starting to look at terms of what we in the insurance industry might refer to as mitigation. And so one of these thought leaders in the fire, kind of progressive leaders in the fire community, started to actually question this idea of that basically traditional models that just kind of look at how many apparatus you have, how many firefighters you have, and how many training hours you do, that basically people in the industry have started to recognize that this is rather dated, and frankly it doesn't, as they said, not a true indicator of potential success. But the interesting thing is we also started hearing that that as much as people in the fire industry were starting to challenge and question some of these assumptions, there was also a nature in which they were like, sure, we're concerned about that it's not actually a particularly valid measure, but that this is frankly, they in some cases were had kind of banked upon this legacy approach, and that they were in fact there's this great quote that we heard, and that basically they were saying, well, either way I win, because either we get a great score and we can talk about how great we are, or if we don't get a great score, then we can actually score political victory in terms of leveraging kind of political resources or financial resources in the future. And so one of the things we started realizing is that actually part of the rationale and part of the reason some of these approaches continue to exist is because they're serving other functions. But ultimately, and we'll come back to this, we realized that really we didn't want to necessarily grade fire departments. And again, we'll talk a bit more about the model here in a bit. But it really just one of the takeaways that we realized that that we really need to focus on the purpose here, not necessarily create something that's really just for fire departments to score political victories in their communities. So, Phil?
So after thinking about this and going through the background of how the legacy models were built and the feedback on the legacy models, we knew from this feedback something had to change. And in today's world, as a modern advisory services organization, that has to start with data. Data is the lifeblood of risk quantification. And fortunately, there's a lot of data out there that can be thrown at this problem to better quantify the risk aspects related to public fire protection of the total fire risk. So this slide here, just a high level summary of how we went about collecting data with no assumption about what data was necessarily predictive, in the end of the variation in fire claims. Claims data probably goes without saying is critical here, and also the premium related to the locations that had claims as well. And that comes from two primary sources, of course, our members providing data that we can use to innovate and build into robust actuarial products, and additional claims data that's provided by others in the market that are wanting to have us innovate as well and provide better decision-making tools in the industry. Community data, that would include census data, data about the aggregate or some summary property characteristics in a region, regional data as well. Of course, fire data specific to the incidents that are occurring, the fire departments protecting communities, and specifically the fire stations in a community, and fire protection related data such as hydrants in an area as well. And then there's another category, other data, economic activity, additional data, weather, crime. There's a lot of other data types that were thrown into this stew as we cast as wide a net as possible to pull in data that could be predictive, with no assumption about what definitely would be predictive, because that would really be falling into this legacy model trap that we're already in. Just a couple of notes here. This is public data. This is member data. There's a few third-party data sources in there were very helpful along the way for the aggregate property characteristics. Precisely is a company that provided us with data in a development partnership, as well as Hazard Hub on the fire station and hydrant data side. And the catastrophe modeling firm RMS provided a lot of good data about regional data about an area that was very helpful along the way. And we're very grateful for those companies pitching in and helping us out as we built our methodology. So Matt, if you can go to the next slide. So this is just a high level summary of how we attack the problem. Once we started pulling in all this data, it was critical for us to really understand it. And we partnered with these different companies and different data providers, learning about that data. So we knew the strengths, we knew the weaknesses, we knew what to use, what to avoid, and how to better interpret the results as we pushed it into a predictive modeling framework. What we use for that framework is a generalized linear model. And there's a few reasons why. One of the primary one being it's widely accepted by regulators in the insurance industry. It's very transparent as far as what variables are predictive and by how much, and also tunable if you need to make adjustments. The Flames model, which is the name of our methodology, we began with a countrywide model. It is a severity or claim severity based model. It operates at a zip code level of granularity for a couple different reasons. One of the main ones being is the wide availability of the zip code field for use in underwriting. It is also a model that is tuned for each line of business and adaptable for state specific requirements. So that kind of goes back to why I use a generalized linear model. It's another reason why you can, for example, if water supply availability is a requirement for a state, you can make sure that you are picking of the water supply availability data fields that you push through the predictive methodology. You have some that represent water supply availability, and you're picking the one that is the most predictive out of those to meet that state-specific requirements while still getting the best fit possible in your model. So that's the approach we took. I will reference the white paper I brought up at the beginning, goes into a lot more detail about this particular topic of the methodology we chose for flames, and obviously the reasons why.
So Phil, on that one thing that I think some of the, particularly the people in the fire service, are going to find odd potentially is that again, historically the approach has been grading a particular fire department and giving a fire department a grade. The key difference here is we're actually looking at each zip code and looking at the severity of expected severity of fires, which again might cause a few kind of question marks, but really that for the insurance folks, it will make it much easier to feed into actuarial and underwriting workflows. That way you don't have to do a property level zip lookup to figure out if a particular property falls in one jurisdiction or another, because really it's independent of the fire department. It's also worth noting there that actually this will potentially serve as a benefit to the fire service potentially down the road. It may not necessarily seem that way initially, because we're looking at zip codes, and zip codes do not necessarily align with jurisdictional boundaries. This really will highlight and will also both positively potentially or negatively the extent to which there's collaboration and coordination between neighbors, basically. And so the actions or inactions of one fire department in terms of their output and their some of the outcomes that they're achieving will potentially be weighed against their neighbor, because again, we're only looking at the zip code. And so we'll hopefully encourage neighbors to actually develop better, in some cases, better mutual aid strategies and automatic aid strategies, and also more coordination in some of their mitigation efforts as well. So,
okay,
move on.
Yes. So I'll have to give Matt all the credit for the witty slide titles, like putting out flames, for example. Maybe it's blame, not credit. I don't know. So where are we with this methodology? So initially, we've been focused on homeowners. As I alluded to in the last slide, we built a countrywide model, and then we fit it to the state, and that's the process, is fit to state requirements. We've done that for Florida homeowners by peril now, and as of January 1st, we have it built into this methodology built into our Florida homeowners by peril methodology. I did want to point out that this is one component of calculating fire loss costs within our model program. It's not the only component. So things like the year built and construction and obviously occupants, things like that are also included. So the more site specific within the building issues are addressed there. And that's very much a frequency approach. And this is the severity approach of flame is more of a severity approach of what about outside the building? How is what the community they're in, the fire service, all these other issues that we're addressing that happen outside of it, how does that impact the fire loss cause? That is really what we're tackling here. Sorry, I said that at the beginning if it wasn't clear. And now we're moving on. We're refining the model for different lines of business. We're looking at dwelling properties lines, tackling that as well, which is a cousin of homeowners, but it's not homeowners. So building that out, and then looking into the commercial lines as well, which is, we expect, will be a very different animal because of the nature of the buildings, the contents, firefighting. It's all quite different. So that's the next frontier, our major next frontier of building out this type of methodology. And then in keeping with that, we will continually be exploring and validating additional data sources and approaches. It will never be done. Let's put it that way. We draw a line in the sand and say this is a good model, a good fit. Let's release this with our model program, but you never stop building. There's always going to be other data sources to investigate, to put in the model, try to expand your fit, to better understand the risk out there. But with that said, we think we've got a very solid, new, innovative framework and methodology for release now, and we have released it in Florida Homeowners by Peril. So you can go to the next slide, Matt. So this these two graphics, everybody loves Matt. Everybody does love Matt. Everybody loves maps is what I meant to say. Kind of brings this whole kind of legacy versus new, modern, data-driven approach a little bit more to life. So what you see on the left is fires that occurred in the Tampa-St. Pete area in Florida. I think it's over about an 8-year period. And what we've done is for each one of those fire occurrences, we have put it into our legacy public fire protection model and assigned it a color, the dot, a color based on whether it's within our 3 buckets of protected, partially protected, or not protected for public fire protection. So each one of those are based on distances, like Matt was saying at the beginning, of the legacy approaches are based on distances. And what you see on the right is this new flames approach, where we have put all of this data through a generalized linear model, predictive model, met the state-specific requirements, and come up with, at the zip code level, what is that variation in risk from this public fire protection basis perspective. And the main takeaway here is not the exact color for an exact zip code, it's the variation that you see across this community, from the dark blue being the lowest risk from this single perspective to the red being the highest. So you see all those colors of the rainbow, so to speak, represented in this area of all these different factors that are driving the variation in fire claims severity. So that is the main thing we want you to take away, is this is a much more robust approach to doing this that is built on actual prediction of the variation in claims.
So Phil, to add a little bit more to this, so again, the left, as you said, is color coded based on AAIS's legacy approach. There are other models out there that basically grade an entire fire department, or at least the part of the community that's within a certain geographic bounds. And so by looking at the zip codes, we actually get a lot more granularity in built up urban communities. Yeah. And so we actually will see variations across the city that you wouldn't necessarily pick up by only looking at the fire department jurisdiction. The other point that I think is worth kind of pulling out of this, because it may seem, again, a lot of this may seem really counterintuitive for folks who just based on the kind of the approaches that have been used historically, is that historically there was this idea that the urban core, which is the areas in which we have typically have highest density of fire stations, that those were somehow most protected, and those were the ones least likely to have negative outcomes, or at least that was kind of the assumption. But what we're actually seeing here is that, in fact, actually opposite that. In some cases, that in terms of fire severity, the urban core and the most dense places are sometimes actually have the highest expected loss. And so actually, it completely challenges some of these historical assumptions, but it really starts to highlight and potential. And now we're actually starting to see that when we look at it this way, that actually you get the expected variation in claim severity when you look across the various ratings.
Okay. Yes. Okay, so I've alluded to the kind of the roadmap already of what we're focused on now, but I did want to just point out that this is an evolution. It started with collecting the data, and as much data as we possibly could, partnering with the experts about that data, and starting to build out a model based on the data we had, and then moving to regulatory approval, which was really a large focus in 2020 for us, is fitting it to a line of business and regulatory requirements that the state had, and getting through that process which is where we are now. Then now we're really moving on to this expansion to other line. We're tackling these other lines to build the footprint out now that we have the methodology together. Let's expand it, and let's tackle common sense lines for the expansion to occur in, with dwelling properties and other commercial lines jumping out as areas that make a lot of sense to us. I will say that we are very open to feedback about where our members would like to see this expanded to, both as far as lines of business and geographic areas. That's definitely a discussion that we're quite open to having. And then expansion to new data sources, experimentation, exploration, even building new data sources is something we're very open to help quantify areas that are not included in the methodology at this point in time. That's all part of the roadmap, and it keeps going, right? It comes around again, and we'll keep refining this. As one of the beauties of this type of approach is you can keep exploring, finding new data, seeing if it's more predictive than what you have already, and keep moving and getting the fit better and better. And the other thing I think is important to note is all this data is moving, right? Everything is changing. The COVID experience that's happening right now is changing the data, right? The fire response, fire department response will change because of that. There's no doubt about it. And this methodology sets us up to leverage that as that new data comes in, and test where we are and test where we need to be to continue to get the best fit we can going forward. So that's the overall roadmap, how this is working, has worked so far. We feel like we're in a great place now to continue to build on what we've built already. And that's the goal. And we'd love to hear what folks have to say about how they would like us to build this out in the future as well.
Yeah, Phil, thanks. One of the other things to that, and again, as you alluded to, is that what we looking forward to having member input, and also input from folks potentially in the fire community, what have you. Part of the AAIS approach to developing products, as many of our members will know, is we use an agile approach to developing. So rather than kind of going into the lab, if you will, and kind of getting our basically disassuming that we have all the answers, and then coming out years later and just say, well, here it is, this is it forever, or for the foreseeable future. We're really looking forward to receiving feedback. So that's why we're having this webinar, and we're also really looking forward to engaging with some of our members and anyone else that who might see this and wants to ask questions about it or challenge some of the assumptions. And frankly, that's where, so again, roadmaps tend to presume that it's there's a start point and an end point, and then it's kind of over at the end point. We really just kind of wanted to highlight that, in fact, this is an ongoing effort. And frankly, as you mentioned earlier, that we're going to be refining this model for each of our lines of business. And frankly, as new data comes in, it will change. And so, so this is not a set it and forget it type of approach. This is really here's what it is now, and we're going to continue to ensure that it meets the needs of our members, but also that it continues to be as refined for our approach as possible. So.
Okay, so you probably know what we look like already, but this this is another view of us, who we are, Matt and myself. Just there's as I can think, I hope people can already see there's a huge commitment to moving fire forward. We made that commitment with the build out of this methodology. This is something we're very focused on. We'll continue to be focused on improving as we go forward, between Matt and myself. And I think it's appropriate now to go to the Q&A session. So we've got some questions already, which is great. So one is, after seeing the presentation, I'm wondering what the predictive variables are within the Flames model. So they do vary, right? They will vary by line of business. They will vary by state, and specifically their state requirements that must be met. So, but it's a very good question. And for Florida homeowners by peril, there are 6 drivers, 6 different variables that are binned. One is population density, which goes back to what Matt was saying earlier. We saw the Tampa, St. Pete metro area. Population density is a driver, and that's a driver that the fire service does not have control over as well. And I think of that as kind of a system driver, right? It's a system of being able to respond to fire events is related back to people in the area, because the people, I think I'm stealing a joke from Matt, is what the main cause, 3 main causes of fire is men, women, and children. So the density of people is a big issue. It continually comes up as very predictive for claims severity. Another one is residential vacancy, and you can think of that as a physical thing as well. If there are a lot of vacant properties in an area, whether it be a high-end area for rental properties or not, it is a physical thing. When a fire occurs in a building like that, there's a different type of response. So the severity and the impact on the system is different from an occupied building. So that's another one that has proven for Florida homeowners by peril to be predictive. Mutual aid received is yet another topic that Matt touched on during the course of this presentation. That's when fire stations, fire departments work with each other. And we have found that to be predictive as well. The more they work together, the lower your fire claim severity. Hydrant density is another one. The density of hydrants in a zip code. The type of fire station is another one, whether it's a volunteer, full-time, or mixed staff is important. And then Last one is predominant suppression apparatus. That goes back to the number of apparatus that are showing up when a fire occurs. So this all goes back largely to the performance, right? We were talking about distance to firefighting, fire stations, fire hydrants, things like that. Not that those aren't important, but it's really in the end how the tools available are wielded and the performance in the end in the community to deal with the fires that are occurring. So those are the six predictive variables that are in what we've released in the Florida Homeowners by Peril model. So this first one out the door, those will change as we tackle new geographic areas and new lines of business. So the second question is best directed to Matt is the flames model actually grading a fire department in an area? This question may have come out before Matt addressed it a little bit earlier on in the talk, but Matt, if you want to tackle that one.
Yeah, thanks, Phil. Yeah, so again, our purpose was not to create a grading approach for fire departments, and so in fact, you're probably not going to see the flames rating put on stenciled onto the side of fire trucks or put onto fire department patches anytime soon, because that was really not our purpose. Really what we're really focused on outcomes. And this is one of the key distinction between kind of, again, the legacy approaches is many of the legacy approaches were really just trying to create a checklist approach of relatively easy to measure fire department inputs and fire department outputs. How many types of this particular type of apparatus do you have? How many hours of training have you done? They're relatively easy to measure. It's not to say that it's not a lot of work to compile that information, but it's they're relatively easy to kind of put into a kind of a checklist. Again, where our approach is going to be refined for each of the various perils or various lines of business. One of the approach we're taking is actually getting away from that checklist approach and really trying to focus on what the fire services referred to as outcomes or fire service outcomes for quite a while. The fire services tended to struggle or challenge or had quite a bit of challenge around this idea of, well, how do we actually measure outcomes? So really what we're looking at here again is expected fire severity. And so again, it's not because you're not grading a fire department, it's not something that, again, that would end up on the side of a truck. And frankly, you might get a different, once we expand and roll out the commercial lines products, you might end up having a different rating in a particular zip code for personal lines and homeowners policies versus commercial lines. So it's again a different approach, and so we're not. So it's probably useful not to just try to take kind of look at them as identical.
Okay, we've got a couple more questions here. One is the composition of content such as synthetic fabrics and furniture is cited as a growing factor in time to flashover and fire loss severity. Is there a practical way to incorporate contents into fire rating? How does Flames address contents and occupancies? It's a very good point. We do think that the methodology that we have built, since it can be refreshed with, we only selected data sets that we could refresh on an ongoing basis. That's one major point. So we can keep up with if those types of issues, that's a very good one for personal lines, are really making a major difference in the industry, that will come out. That will come out in the data. And I would also posit that the things like year built as well are part of this as well, not just the contents, but actual the layouts of the buildings. make a difference as well. And that is changing with more and more open floor plans. So the question, I believe, goes back to the modern world and how things are changing in the built environment, including contents. And it goes from a flames perspective on the public fire protection severity. If we're continually updating our data and we're pushing it through, then those types of changes over time will be incorporated into the model, into the predictive model, just like changes in the auto industry over time get incorporated as well. That's really one of the critical things about building a predictive model based on non-stagnant data. So that's one piece. The other thing I did point out before is there's also a component outside of flames to quantifying fire loss cost that does take into account things like your built. And that is also built upon data sets as well, where we can actually screen that out and use that as a variable in our calculation. So as those pieces are changing over time, it would be reflected in the updated loss cost that is calculated in the end. Matt, I don't know if you have any additional comments with regard to that particular topic or not.
Yeah, the ultimately the challenge and the question asker was a great point that with the changes in materials in homes, there's the flashover models have changed. The challenge is there's just not a whole lot of good and probably for a lot of good reasons, but there's not a whole lot of data about what people actually have in their homes and specific properties. And so, but yeah, at a high level, we kind of get at some of these through other data points. One of the other questions that came in was in reference to potential some of the quality assurance issues around NFIRS records, and I think it was Tracy that asked that question. That's really a great point. That there is some significant known challenges with fire incident reporting. In fact, it's something that I've spent quite a bit of my time trying to address and trying to help fill in some of those holes. So we did quite a bit of QA and trying to identify where some of those anomalous places are. But the other part here is that NFIRS is not the only input into this. So even if, for example, even if there was a community that isn't necessarily reporting, or for whatever reason that data never made the national data set, it's very likely that information about those losses would kind of be exposed through looking at the claims data that we have access to. And so, also by doing a national model, and also even when it's just narrowed down to a specific state, it really makes some of those small anomalies and some of those small fire departments that may not necessarily report data, or may not report it accurately or consistently, or whatever the QA challenges might be. It sort of smooths off the rough edges there. And so hopefully won't have a dramatic impact. And frankly, through some of our analyses, did not show a dramatic impact in terms of looking at that.
Okay, we'll jump on one more question here, and that's, in using census data, do you have checks built in to make sure that communities don't get accidentally redlined? And the answer is that's a topic that weighs very heavily on our minds. And yes, the checks are really, when we're reviewing the data, we're also working with our legal team to discuss those types of issues as they relate to the regulatory environment, and just avoiding building those into the model no matter how tempting they may be, to get the best different model fit, let's put it that way. So we do have to be consciously very aware of that, and also talk to the regulators, engage with the regulators very directly as we're building, and we definitely did that as we built this out for Florida. I intentionally highlighted earlier on in the first question we got asked, the vacancy, residential vacancy topic, and that one reason I did that is to point out that the physical part of a vacancy is really what the focus was there. And for the state of Florida, there's a lot of vacancy in pretty high-end areas, you might imagine, for vacation condominiums and things like that. And we saw a lot of that. And it was definitely a driver, a real physical material driver, that, we made the case that should not be a redlining issue for that reason. But the point is well taken, and that is something we need to have when we do have our radar on at all times, to make sure that we're not crossing into those types of areas. It's an ongoing concern, ongoing focus, and will continue to be so.
Phil, if I could add one little bit to that, and this is also one of the primary concerns of the regulators. And so I know we have some regulators on the call, and also, again, because this is a filed model, this has gone through regulatory approval, and again, for the state and for the product line that it's in. And so that really is one of the key distinguishing factors between risk models that anybody, any person could come up with. So anyone's able to take NFIRS data, and frankly, we've probably all heard of, particularly in the fire community, we've heard a lot of programs that are out there, and technologies and tools that people have been developing to try to identify fire risk. And so anyone can come up with a risk model the mathematical formulas are widely available. The real challenge and the real difference here is that we've had to go through the extra step of regulatory approval. So that's really for the non-insurance folks on the call, that's really the key distinguishing factor when we talk about a filed program. For insurance companies in the admitted insurance industry, they're not able to just take any approach that anybody's created. They have to actually make sure that it meets all this regulatory approval. And to Tracy's point, the concerns, and the very important concerns about redlining, remain a real consideration. And frankly, was also referred to as impact, in terms of what would some of these proposed changes mean for consumers. That's, again, another part that the regulators tend to look at. And so that's a key part of this process that we went through.
Okay, I did notice we got a couple more questions. We'll have to follow up on those offline here, but we will do that. And I think we have one more slide that just kind of talks about where we are now with how to get in touch with us. Once again, this white paper is coming out as well. There is a web page specific to flames as well that you can see right now. We're very interested in engaging on this, and as I kind of said before, this is a member-based organization. You can help steer us really to what matters to you the most, and where you would like to point this methodology toward. Very interested in hearing your feedback in that regard. And we really appreciate all your time, engagement, great questions as we went through this overview on flames. And we hope that you have a great rest of your day. Thank you.